Welcome everyone to the Kendall Report. Well, we had quite the day. The algos on the daily were suggesting that we were going to go up for multiple days. Didn't feel like it with the war and everything that was going on, all the tragedy and loss of life. It's just getting just crazy, this random bombing of people. I don't even know what to say anymore, folks. This is a very interesting world we're living in. It just seems to get worse by the day. Anyway, what I saw today about midday is the hourly algos actually turned very early this morning, and we trusted some of those levels that I talked about yesterday, just a touch under, I believe, 4,300, and the market just turned around and mid-session just got huge rally, and I think that was based on some of the comments from Fed presidents. They're out there jabbering away, trying to jawbone the markets, which they did a pretty good job at least convincing people of stuff. I'm looking at my nightly cheat sheet here, and it's pretty much blank. I don't really have. There's no news really coming out tomorrow. There's nothing of any substance anyway. There's a couple small reports, and they weren't even worth mentioning. The earnings that I talked about last night, there's nothing there as well. So just, we're kind of operating on market sentiment, and I'm not even sure what that is. There's certainly, with geopolitical risk around, there's a lot of things that are that could happen, might happen, won't happen, who knows. It just kind of sets up for some volatility, and we did get volatility, and market was able to really catch a really big bid today. So that was interesting. I know somebody last night was saying now the buy the dippers are really going to get hammered now, and I was one of the buy the dippers last night, and it turns out to be a pretty good day. As far as going forward, I think what we'll do tonight is just try to go ahead and do the technical setup as we come into Tuesday. Wednesday setup, we'll start to get into the PPI and the CPI and where the meat of this week is going to be from a standpoint of what likely is happening in the markets. But I think today's, I don't know if we want to call it resilience, but the rally was pretty impressive. Like I said, it was signaled by mostly comments from a number of the of Fed presidents that were out jawboning and everything. I'm just looking here. Just no real notes here. The probably defense stocks, a whole bunch of that stuff is probably something that we ought to pay attention to. I wrote down some symbols, so I'll get through the. Maybe we'll do some. At the end, I'll get through the normal technicals that we go through. And then obviously there's also no bond market. So we're missing elements here. So maybe what we'll do is I wrote down some stocks that maybe we can go through at the end, some energy stocks. And maybe that's what we do here from the standpoint of, maybe that's the right thing to do. We'll fill in a little space. Shouldn't take me too long because the setups are pretty straightforward. One of the things on this broadcast tonight, on the headline for it, is markets are going to get right up into the resistance levels that I was talking about yesterday. And so we're going to get challenged. The question is, can we break out? I'll set that up. I don't think certainly tomorrow is the day that we get a breakout. But once again, we had that huge Friday based on employment numbers. We got Fed talking heads out. They're kind of talking up the markets here, and tomorrow will be another day, but it's going to be another probably pretty light day, at least from the standpoint of a lot of outside stimulus other than potential geopolitical risk. So let's go ahead and let's get into, we'll go through the S&P. There's no database. I don't have anything right now, okay? So until tomorrow we'll be able to update a lot of stuff. So let's go ahead and get into the technicals. Yeah, just a quick test on the mic. Is this better? Is it? All right, so let me know if that buzzing's still going on. I think I know what it was. We'll find out here in just a minute. Okay, so the hourly charts on the S&P, we've got big upslope going on. Looks like we're going to run through the night, even though the PPM1, even though PPM1 is kind of starting to being forecasted to come in here. If we come over here and I put my cursor over where the PPMs are, we're still at 0.30, which is still in the uptrend, and that's why the WTAR, the forecasted SMAs, are still upsloping here, even though it looks like the PPMs are going down. So folks have asked about this just real quick. Is that what happens here? Even though it looks like the PPMs, they're pointing down, all they're doing is telling you that upward momentum or that angle of attack is changing. And even at the worst levels here, there's a little spike over here, which all the way into late Tuesday. It's not, these algos will change as we get some more data, but they're pretty accurate for the next 3-4 hours. We should climb up this angle here and just stay positive as we go forward. I don't see any real downside, and that 10-period moving average on hourly is 43.48, and it is rising at about 4 handles per hour. So it looks like that will be the case. That sounds like that'll be the case there. So let's go ahead and go to the daily. Like I said, we should be able to get through this pretty quickly. And the daily is also got that upslope. I mentioned this number last night. This is that pivot number, these red dots that are in this pattern. That is 43.89. So we were able to print up to, the high yesterday of 75. So we almost got there. I suspect if we just look at the market grid, 43.87 is R1. I want to back up just for a second before I go through the market grid for today. Yesterday I was talking about potential of an S2 R1. We actually exceeded it. We went S2 R2, and it was I talked about the possibility of getting an expanded range with this thin day, and that certainly happened. We look into tomorrow now. R1 is 43.87. That's right there at that number. 43.89 is those red pivots, and we also have 43. Let's see here. Let me get 43.82 is that pivot. I'm sorry, I made a mistake. 43.89 is the 21-period moving average. So we have right there, we have a clustering of numbers. I would watch really closely for a rejection. And this is a pattern I've been talking to you about for a while. Let me just try to elongate this a little bit so you can see it. Typically what will happen is we've got this upward sloping PPM1, downward sloping PPM2, which means the 21-period moving average is declining while the 10 is rising. Typically we get stuck within that range, and that would put us into, like I said, if we just look at the S1 is 43.50, S2 43.29, and then R1 is 43.87. So I would suspect maybe an S2 R1. I don't know that we can get through R1. If we do, all of a sudden R2 is 44.08. We're testing that 44 handle, and that would put us up just a bit higher. But I'm trying to bring in some some numbers here because there is also some upward projections, and I mentioned this yesterday. Right at the 40-period moving average, 44.21, we also have a Fibonacci target to 44.17. So there's some pretty decent numbers here, folks, that could get us testing the 4,400 level. And none of us were thinking about that on Friday. It seemed pretty far-fetched when we were all the way down here on Friday's reversal. When we printed 42.42. All of a sudden we're basically talking about being 200 handles higher. But there should be substantial resistance right here at this 21.80, 87, 89. If they break through it, I would still look for some kind of rejection out of this area. And if we print that level early on, then it's possible that we're going to see, we'll get an early rally and then a rejection from there and maybe coming back in. As far as the algos go, it looks like we're going to stay reasonably positive. That 10-period moving average will keep moving up. And we're still, it looks like a day or two from the forecast standpoint. From the forecast standpoint, it looks like we're a day or two from the market being able to penetrate the 21-period moving average. So a couple-day consolidation would be at least coming into Wednesday when we start to get some of the big news of the week with PPI and CPI. All right, we'll go to NASDAQ next. NASDAQ was a little bit muted yesterday. The S&P was up 0.63, while the NASDAQ was up 0.39, and the Russell was up 0.60. But it looks to me, even though the pattern is somewhat bullish, we still have some resistance, and we'll have to look at the market grid here from the standpoint. R1 is 15,266. I kind of went on and on yesterday about 15,100. We got right to 15,212. That number was actually, we look at yesterday's numbers, they were 15,199 was R1. So we basically did the R1. As we go through today, we're looking at a couple things here. There is some Fibonacci targets in here. 15,245, 15,357. There's some real tight numbers. And you can see here that the PPM1 is actually suggesting that we've got more upside, and we're not even looking at a potential crossover on the PPM1 until looks like, next week. So we have this positive slope that is likely to continue. So it does appear the market's going to continue to stay right into this moving averages and stay. That 10-period moving average is going to be your ultimate downside risk. That should be your buy the dip level from the standpoint of where the markets are here. But you see the PPM2, PPM3 are starting to expand as well. So everything looks higher here, folks. So it's going to be interesting. We'll see if the talking heads can keep to hype the market, and hopefully things get under control overseas and Israel and Gaza, that people come to stop killing everybody. It's just a crazy situation. So the bottom line is markets from a pure technical level look like they're going to continue to improve. And I mentioned yesterday that we had the reversal. It's more both defined on the NASDAQ and the S&P, and the higher close today. I told you if we get a higher close, that will confirm it. So there's a possibility of another at least 1 to 2 more days higher, and we should follow along this line that we're looking at. The algos right now are suggesting that we've got a positive slope, like I said, until at least into next week, mid to late next week. So it's going to be interesting. It looks like the pattern once unfold is fairly bullish, and right when everybody was telling you remember crude oil, we'll cover crude oil here in a minute, was going to go to 100, and all those things happened. And even I think that the reaction that we're seeing in crude, which I'll cover here in just a minute, is also very, very muted. It's like I said, hopefully these folks figure out how to stop all this stuff all the time. Let's see here. Yeah, it's basically the 3-day trade is it. It's not technically a really clean one, but it is an outside bar, and we did get a confirmation. So all that has to happen, we need to keep printing new highs each day on both the S&P and the NASDAQ, and we just can't take out the previous day low. So this is basically, the algos are actually suggesting we should be able to get a decent one. A decent pattern here to trade. Like I said, everything looks like up to next week. And Johnson Long, sorry, man, I didn't mean to reference you. But yeah, these patterns are just so powerful. These algos are very, very, very good. One of the things I do want to do, somebody was mentioning, just a quick side comment here, that would like to show you guys some of these techniques on the intraday on the PPMs. There's some new, with the algos and with the predictive nature now, with the auto regressions, there's some new techniques that I've been picking up with trading. I had a very big day trading today, and the reason for that was kind of a new technique of using the PPMs outside of what I have on the class. And so just so you might have noticed and figured it out by, if you watched some of the screens, I know you guys see the same setup while I'm waiting for the room to fill up, but we are working on a master class and some things that come up that are going to really expand the knowledge. We've got quite a few of you out there with these indicators. And if you don't have them, kindlereport.com/indicators. Kindle 30 gets you a 30% discount. You bought the first ones, you get like a almost 70% discount if you bought the first ones on the second update. So anyway, but yeah, the patterns are just really solid here, folks. It just it looks like we're going to continue on. And like I said, don't be fooled when these PPMs are starting to fall back, because even though they start to fall back, that there's still that angle of attack still is the dominant thing that you need to watch for. All right, let's get into the Russell, see if we can get through this. All right, the Russell actually had, after getting the outside bar, managed to hold inside of the market grid yesterday. The market grid projections, the extreme was 1728. We printed down to 1735. Actually, our S3 was exactly 1735.80. The low was 1735.60, so it was spot on. And then on the upside, we printed 1775, which was R2. R2 projection was 1775.30. The high was 1775.70. So perfect range on the S2 R2 range. I'm sorry, S3 R2 range. So it was pretty volatile as we expected. Now it's interesting because the next 2 days for the Russell are kind of backfilling, and we did see a bit of an overperformance today. So it's likely that we'll see some resistance, and I'm actually telling you that to watch, especially on the S&P, that 87, 89 number, because I think we get a rejection from there. I don't think it's big big giant reversal, but that's going to be really heavy resistance at those levels. All right, we're going to skip right straight to crude oil. There is no treasuries. We covered those yesterday. I'll cover them tomorrow night. You know, I'm going to do something. I know it's going to mess everybody up. I am going to bring the treasuries up just for a second, okay? I'm going to go back and redo this. All right, so let's just go back. I just want to take a quick look at the 10-year. I did notice looking at the 2-year that it's actually printing under 5%. All this stuff is happening pretty much like I told you. We're still going to climb up on this 10-year, so look for this number to move up over the next several days or right into next week. I've been talking about the second week of October. That's going to be somewhat where we start to peak out on the back end of the yields. And I'm just going to bring up just a real quick review of the 2-year. I don't know why I always do that. Sorry, wrong symbol. So we got an STX buy signal there. And so it looks like, but notice the downtrend that is formed here on the daily. So 2-year down, stable sideways to up on the 10-year. That yield curve is going to continue to kind of nudge into that flatter and flatter yield curve, with the exception of the very front end. I've said this before, when you have the Fed funds, 13-week, the 1-year bill, once you get into the notes and the 2-year, you should see that drop there. And then the 5 will be a little less pronounced. And then you see the 10 and the 30 continue to climb higher. And from the 2 forward, try to get into basically completely flat. As you're pushing 490 on the 2 right now, 492, and we're 470 and change on the, let me put the 10-year back up here. So you're pushing 479, 480. So they're getting almost completely flat. And so just expect that to continue to happen. Okay, now we'll go on to crude. All right, we did put a little bit of a gap on the chart yesterday. We have, but in the market grid, this formation here, I call this a bubble bottom. The algos are suggesting we should backfill. Tomorrow we've got this downward slope here on the 10-period moving average, which is minus 45, even though we're about 2 days from it trying to click up and being able to challenge the 10-period moving average. I'm going to try to show you something in here. And if you've got these indicators and you put the Fibonacci tool, Wavetech Fibonacci tool, there's 3 little red dots here. As long as you leave it at the defaulted settings, you haven't changed any of the settings inside the indicator. As long as you keep them there, you're going to have this little 8817 is going to be kind of the pivot on the upside. It also coincides with the 21-period moving average, 8882. So you've got quite a bit up here. And it's interesting because it does appear as we come into next week, like a lot of these that we have, these charts we've been looking at, look like next week. Last month we went through all of September talking about the 3rd week. Of course, it was the Fed week of September. Now it looks like everything's focusing in on the 2nd week of October right now, being a turning point. And as we know, we come into the second half of October. We're coming right into the Fed meeting on November 1st, and we got major news coming out on Wednesday and Thursday, PPI and then CPI. So we at least are going to have a lot to digest from there. Yeah, so just a quick comment on the flattener. It's actually a steepener that's happening because what's happening is the back end is starting to turn up. And even though there's actually a steepening of the yield curve that's going on, is on the back end. So it's from that 2-year. Ultimately, I think the 2-year ends up. Sorry to get into that. I just wanted to address a comment there. Is that the 2-year will come down a fair amount, maybe even to 460 level, and then the back end's going to be higher. So the back end of the yield curve will be a steepener from that standpoint. And so back to crude. I think we just get sandwiched. Here's that one of those wedges again. I'm just going to open that up just a little bit so you can see it. Is we probably right along the 40 and we stay below the 21 here, and those values right now are at 85.70 and 88.32. So we probably get sandwiched in there. I would look for, if we do get a little dip on the oil here, look for the market grid to kind of turn down as we come into tomorrow night. I'll cover that tomorrow night. And the bottom line is that it doesn't look like, let's go to a weekly chart here real quick. It doesn't look like we've got this explosive vertical patterns that's going to come out. Now we did get, and I'm on a weekly chart on the crude here. We did get last Friday with that crazy, we were down 8.5% last week on crude. So we did get an STX buy signal, which says we should get 1 to 2 weeks sideways with a slight bias to the upside. And that's basically what we got. If you look at the algos on the back end of this thing, if they're even close to right as we come in to early November, that everything's going to roll back in. We probably end up around 80, maybe even a 75 print. So that would tell me that there's probably the Middle East situation doesn't get out of control. I don't think Iran is going to do anything in here. I don't think there's going to be that much of an escalation of anything from the standpoint of other players coming in. I don't think anyone wants to play with this thing. And I know the U.S. sent warships into the area. I'm not sure. I think it's posturing, but maybe that's good enough to work. And hopefully that's the case, because don't need any more bombing than has already gone on. And but this pattern just suggests to me this is not one of these explosive patterns. It doesn't appear that way right now. And in fact, the opposite looks like everything comes back into balance here fairly quickly. So let's hope that's the case. So we'll stick on going into gold. We get a little bit of a bump here in gold. Gonna make our friend Peter a little happy, but I've been talking about this thing is actually turning up a little bit, and it does look like we could get up and test the 10-period moving average, which is right now 1919, but it's coming down at about $10 per week. So really 1900 could be retested from the bottom side. And this 200-period moving average, I remember talking about this weeks ago, that was really the target. There was a fib target down here right at that level, 1826. 1821 was that number. We printed 1823.50, and at that time we were 1819.15 on the 200. So the 200 got a bounce here. We probably get sandwiched between the 200 and this downward sloping 10. Even if we come over here into December, that 10 period moving average is still down sloping, still going to be resistance overhead. So somewhere it probably comes in around 1880, 1900, maybe a little lower, depending on what happens from that standpoint. Not really a lot to talk about, but it's actually acting as it should have and as it was being forecasted even on, I'll go to the daily chart for a second, but the algos on the dailies, if you recall going back into first week of October, we're forecasting some higher prices, and we've actually broke over the 10-day moving average. There's a pivot right here at these numbers at 1874, so we're trading right at those levels, 1875.20, and pretty narrow range, really a buck range for the night. So it's really looking like we could print up toward the 21-day moving average. That is 1901. So there's that numbers everywhere from 1880 to 1900 is going to be pretty strong resistance. The algos are just suggesting we probably trade into that, and then we get some consolidation, and that's actually in sync pretty good with the intermediate charts or the weeklies that we just looked at. All right, so Bitcoin, and what I'm going to do after Bitcoin, I'm going to bring up some of these stocks here, and we'll play for a few minutes here. What time are we getting to be? Yeah, we're only 34 minutes into the broadcast tonight, so we'll definitely take a look at some of these things once I finish. Okay, so a little bit of weakness coming in. We got below the 10 period moving average. This is something I was talking about last night. The algos are starting to show that we could print down probably the 21, 27, 150, 125 range should be the bottom end. We also have fib targets there at 27,083. Should be the bottom here, and then start to firm up. Let's go over to the weekly. That's kind of interesting. We got some new fib targets to the upside now for the weekly. Weekly charts still suggest that 40 period moving average is cyan line. This is the big number to watch, 26,838. We stay above there, we should start to climb. We now have new Fibonacci targets coming in here at 31,982, 34,6, and 36,346. If you recall, I'm going to expand this chart a little bit. We've had these Fibonacci targets back here suggesting almost same number, 36.2. This is the extreme of the new one. So what happens as the pattern evolves, the WaveTech fib target adjusts as it sees the new pattern. So there's a new pattern being recognized, and it's adjusted this fib target to these three new levels. Now the extreme equals what the first level was, fib target 1, before off a larger pattern. So what you get is these contracting patterns, and when this happens, what usually means is that the trend is compacting a little bit, and it actually gives it a higher probability of reaching some of these numbers. So now the first fib target is 31,982. That's basically a retest of this last previous high. So then if we break through that, then we can hit fib 2, fib 3 in this pattern. But this is weekly, so we're looking at multiple weeks down. But everything's still on Bitcoin, still looking a little bit higher. There's still a pretty good range there. Okay, folks, I just want to come back on screen for a minute. We'll go back to the technicals here in just a second. And I've got a small list, and maybe I'll solicit some outside stuff. Let me just go through what I have. I've got maybe 6 or 7 stocks. And I think what I want to do, which will be kind of fun, I'm going to bring up our Portfolio Expert software. And maybe some of you, I don't show a lot of this software like we used to back a few years ago, but I just want to show you. I want to just put these. I'm going to build a short-term portfolio and see which stocks are already owned by some of this, and see what kind of patterns that we get from the portfolio manager, and then we'll go look at the individual technicals. So it's 38. We'll easily spend another 20 minutes. So you folks want to hang out, then we can do that. And yeah, and then maybe if I can get through this real fast and not get on any kind of rambling about anything, which I'll try to stay straightforward to it. But let's go ahead and I'll bring up the screen, and we'll see if we can put a couple of these things together. I'll bring up the Portfolio Expert, and I'll be able to just generate a random without doing a lot of work and validating symbols. I'm just interested in putting a group of symbols in. In fact, I'll tell you what we'll do is I will solicit a few symbols. So if you have a couple, and this is defense only, because one of the things that they made clear today, you know, I triggered a whole bunch of people on YouTube last night by trashing the Biden administration and their idiocy that they have. And so maybe I just got to stay down that path. But basically, they've already called up a bunch of these folks I'm going to put in their stock here in a minute, said, hey, crank up the machine full, we're buying ammo. So whether it's going to Israel, whatever, you know, this sad part of this whole thing is just that it happened at all, but now they're just gearing up the machine, and now they're talking about land offensive, and they're going to make this a big deal. You know, not that it's not. Listen, I don't have any opinions about it. I do, but I don't know enough to even talk about it. But what the rhetoric that's coming out at the moment is that Israel is going on the ground, and they're going to go and occupy the Gaza Strip again and just take over until they think it's safe again. I don't know what that means. That could be 1 year, which it won't be. Could be 5, 10, who knows? Maybe forever. So, you know, you never know with politics and countries and what happens there. But nonetheless, they're going to need these munitions and all this stuff. So let's go ahead and let's build a quick portfolio together. Seriously, it's going to take just a couple of minutes to do. Is this a bad time? It could be a bad time. I hope not, because our servers are about to run. I think we'll be safe. Once we start to collect data, then we kind of freeze everything till the data gets in. But let's try to do this really quick, okay? Let's go for it. All right, so here's the platform. What I'm going to do here. I'm just going to bring up a different screen here, and very quickly I'm going to go in here and I'm going to build what is. I'm going to go to our portfolio designer, and I'm going to what we call a capital demand model, and we're just going to run a wizard on this thing really quick. So we're going to call this I'm just going to call it Defense Live, and let's just go back. We don't need to go all the way back that far. Let's just go back to 20. Let's go back to 22, like 2-year look back. So we can set this so that the models we'll run back and do all the trades. But let's just go here. We're going to put, let's put $1 million in the account, just so we have plenty of stuff to go. And then yeah, just let me do a couple settings. I'm not going to explain what I'm doing, and I'm going to be aggressive with the portfolio. And I know a fair amount of you have access to this. No transaction fees and no management fees. So here we go. These are the symbols I have. And if you folks have yeah, that's somebody, Jeffrey. Hey, Jeff, how you doing, man? Yeah, we are working on a project to with the database, really looking for certain metrics and some mining stuff, and I'm sure chat will be part of that effort once we get it set up. We've got a very large database, so let's keep rolling here. I'm going to put in BA, NOC, GD, LDOS, KBR, BWKT, RKLB. You guys have some stocks you want to throw at me? Defense only? Okay, here we go. CACI. See if anybody else put anything out there. Yeah, that order that got filled, there was some scalp orders I had, and then some of that stuff got over RTN. Okay, yeah. Yes, do we have, yeah, LMT, defense only. Yeah. Yeah, PLTR. It's a dog with fleas, but why not? What's Raytheon? Somebody give me a Raytheon symbol. What's PBR, Vitas? All right, I'm going to just go with these. I'm trusting you guys. KTOS, PBR, SW, RTX, yeah. Okay, yeah. All right, well, let's stop here because we could go on and on. We can put up to 1,000 symbols in this thing and we'll trade them all. Yeah. Who makes all the ARs? Is that yeah, I got GD. Yep. All right, let's just run this just for fun, and then we'll go through and look at this. So I got to go back one. I need to add those. We're going to run them on a daily model, short term, just to see. I'm kind of more curious about what's been run here than anything. And let me add these symbols. You'll see them all come in here on this box right here. So that puts them into a portfolio. Go to next. It's calculating some allocation strategies. So 11%. Okay, let's go. All right, so I got to find this thing. I'm just hoping I didn't hit the server run stage and we just wasted our time. Defense Live. Here we go. Okay. Let's just go let's go year to date or 1 year. Let's go year to date here. YTD. Yeah, things kind of been all over. This is trading the defense stocks this year. It's up right now. Defense Live is up 465 on the year. And if we, so I just kind of wanted to see what was long. So if we go to, these are going to be fairly small. I don't know. I'm going to try to do something, but I'll tell you a little bit about them. Portfolio orders, it was interesting. Halliburton got bought this morning. PSX, Phillips, Schlumberger, those are kind of oil. Some you guys slid those in on me. But so there were some new buys for today. And then we look at the open positions, and these are going to be fairly small. I'm going to try to zoom in and see what we can see here. Yeah, this is, yeah, I don't want to really mess with this screen. But just want to see what is out there. So here, the only ones that we have long right now is Katos, LHX, RTN, SWBI, just Smith & Wesson. And yeah, so not a lot. This is a short term, I suspect. But let's go take a look at some of these charts. I was just kind of curious. It did pretty well, actually. It did well right into, right here. We actually were up some pretty good numbers. Let me put something on here. Yeah, so these stocks have been somewhat underperforming. They ran up about 10% earlier in the year. But let's go ahead and let's go to TradingView and let's pick a few of these just so we can take a look at a couple of these. Let's go to General Dynamics. Start with. Yeah, this would be kind of interesting here, folks. Let me get to the right screen here so you can see it. We got this big bounce out of here today, but it looks like everything wants to stall here. This is similar to what we saw as far as the algos go. This is weekly too. So there's, like I said, on the oil, it doesn't look like there's like a big explosion, but these companies are probably going to be in favor here for a little bit. I should have ran a intermediate model as well, but I didn't. See what time we got here. We're 15 minutes, so we got another 10. Let's go through a couple more of these, but it looks like kind of upward bias here for a little bit. And maybe there's some retracement values, but none of these are like big, well, nothing we've looked at so far. Let me just go to like NOC, same kind of pattern. Look at this. Really, these stocks haven't been doing much. Get a little blip off it today. It looks like they're going to probably slide right back into the pattern. So what I was wondering if we would see here is if we would see any type of explosive stocks here. Not really seeing anything. Oops, sorry. Yeah, I had a couple of symbols here that were bad symbols. Let's look at Palantir. I haven't looked at that for a while. That's interesting. Now Palantir has some. Look at these fib targets up here. This is probably the better looking chart that's out there at the moment. Back to 26.48. Man, that's back to meme days. This stock got down all the way down to $8 or so, and be interesting to see if we were able to bring this up over on the platform here. Let me just come over here and let's let's do this. See if I can get a good number for you here. One sec. Now let's just go to a symbol. I want to bring this up in the system, see what we got here. Yeah, so this is one that we've actually been long this one since about $8. We're still long this stock. So it was out over here at $24. And now if we go back to TradingView, so our models picked this up a little bit ago, back on 2/3 of this year, on February 3rd this year is where we got the buy here. So it's still long. So what we're looking at here now is if we come back over and go to these technicals, now we can see there's fib targets for this to go up to 26.64, 31.59, $34. So this is, like I said, this takes us all the way back into like the meme days of 2021 before the big collapse. But this is pretty positive. Like I said, this is one of the better stocks that I've seen. Let's see. This company's been, this is a weekly chart here, just been kind of chopping up. Does look like a little bit, like I said, so far PLTR looks like the best stock we brought up. Yeah, what I think I'm going to do real quick, if you folks bear with me for a second, is hang on. Oh boy, I'm in a bad place here. Okay. Let's come over to this platform. I just want to put this on here because I can have buy signals here. So I want to just see what's going on here. CACI, and this is daily. Let's put it on weekly. Yeah, so nothing here on that one. This was PLTR. That's what I was showing you just a little bit ago. This would probably get the wrong model on it. But this is just becoming a cluster. I was hoping to be able to show you guys some stuff that would be helpful. But let's go back to TradingView. Do a couple more symbols. Yeah, that's interesting. Yeah, I'm sure they do want a lot of thousands of small, cheap autonomous drones. I bet they do want those. Yeah, I'm just looking at, yeah, my favorite stock we've looked at so far is the PLTR. It's like the best pattern. That still got some continuation to go on. But yeah, so I'll just come back up. I need to plan a better presentation for that. I just thought we'd throw some defense stocks. Probably should have thrown those all in on the intermediate, not the short term. Yeah, I'm just looking at some comments here. Yeah, that's something I'm going to work on, that defense strategy, because they're going to keep pumping this stuff for a while probably. And it doesn't look like, the one interesting thing that I want to say here before, as we end the session, is it doesn't doesn't look like anything's in some kind of runaway. The patterns aren't really that, I would say, not bullish. They're just kind of consolidation patterns, range bound. So maybe even though they're spending a bunch of money on this stuff, it's not going to equate into a good trade. Remember the infrastructure trade of probably 2021? Looked like they were going to spend a bunch of money on infrastructure, and that's not what happened. A lot of these stocks never moved a lot, and a lot of money, especially in the interstate system. If you're familiar with Peter Kiewit and Kiewit Construction, they get most of the money for the roads. It's a private company. They're like Bechtel, same kind of deal. No one knows what these guys are actually doing. So it's kind of interesting when you can get those kind of government contracts and get the through states and all that stuff. Why would you want to be public? Why would you want that, right? So there's just a lot of money. You'll probably see any major interstate revamp, widening, all of that stuff. You're going to see Kiewit Construction everywhere. It's also one of Warren Buffett's best friends. They used to be in the same building in Omaha. So anyway, they may still be. I don't know. But anyway, folks, thanks for watching. Sorry that wasn't a little better. I was hoping to bring that up and do something that wasn't as good as I'd hoped. So we'll have to organize something where we do like a whole session with just stocks. I miss the old days when we used to do the stocks and you folks would call them out, and that would be the best way to go. But anyway, thanks for coming. Tomorrow we'll have a little bit more to talk about. We'll see what the database looked like after today, and maybe we'll get a setup for coming into PPI and CPI as we come into the week. As always, thanks for watching. Appreciate everybody coming, and we'll talk to you real soon. Don't forget, get the new indicators. If you bought the first set, you get like almost, I think it's like 60 or 70% discount off of the current price. If you want to get the indicators now, you just go into kendallreport.com/indicators. Either way, all you have to do is put in the keywords or the Kendall 30 for the discount, and you'll get 30 off of that. So definitely do that. Look forward to seeing you guys tomorrow night. Have a great day. Thanks for hanging out with us.